Hello. Good morning, good afternoon, and good evening to all our listeners worldwide. Welcome to another Off the Chain AMA. I'm your host, Kelechi Ibe. Thank you for joining us today as we delve into another exciting topic. Today, we will be taking a deep dive into LSDFI, which stands for Liquidity Staking Derivative Finance, and discussing its intersection with decentralized finance, DeFi. Um, for those of you who don't know, LSD5 protocols are pretty much exploding right now in popularity, and have opened up new opportunities for yield-seeking LSD holders. And LSD liquidity staking derivatives basically offer a solution to the problem of illiquid staked assets in the blockchain network, such as Ethereum, Solana, BNB chain. So by tokenizing these staked assets, for example, staked ETH, users gain flexibility and liquidity, allowing them to trade or utilize these tokens in various DeFi protocols while the underlying asset remains locked. Obviously, this, introduces some additional risk like smart contract vulnerabilities and counterparty risks. So these are the some of the topics that we're going to be covering in today's AMA. We have a stellar lineup of industry experts and builders who will be sharing their insights on this topic. And so get ready for a very, very educational AMA today. On joining us, we have Victor, who is the co-founder of Manta Network. We have Balal, who is the co-founder of Zkex.com. We have Woody, the CMO of Nest Protocol. We have Alson, the marketing head at MUFEX. And we have Gareth, who is the DeFi architect at TENET. So a very, very, experienced panel of speakers today to discuss this topic with us. But before we get started, I would like to read our disclaimer. The information provided is for general informational purposes only. All information is provided in good faith. However, we make no representation or warranty of any kind expressed or implied regarding the accuracy, adequacy, validity, reliability, availability, or completeness of such information. The statements or opinions expressed in this event are those of the authors and do not necessarily reflect the views of Bitmart or its affiliates, and shall not be considered professional financial investment advice. All cryptocurrency investments are highly speculative in nature and involve substantial risk of loss. Past hypothetical or simulated performance is not necessarily indicative of future results. And the value of digital currencies can go up or down, and there can be substantial risk in buying, selling, trading, holding on digital currencies. You should carefully consider whether trading or holding digital currencies is suitable for you based on your personal investment objective, financial circumstances, and risk tolerance. And yeah, before we actually dive into the main AMA today, we have an exciting announcement to announce. Bitmart is proud to introduce our flagship Learn to Earn program, which is a unique NFT-based initiative designed for eager learners like you to earn rewards while listening to our AMAs. In this program, you can earn what is called stamped NFTs by actively participating in our AMAs and various learning events, both online and offline. These stamped NFTs basically serve as a proof of attendance and engagement, and you can collect them for every Twitter Space AMA that you attend, starting with the one today. So for instruction on how to collect the stamped NFTs, please check out the information provided on our pinned tweets. But please note that you have to fill out our Gleam form in order to receive your stamped NFTs. So that is very, very important to point out. You have to fill out the form in order to get your stamped NFTs. One thing to point out is the stamped NFTs are not tradable. So you cannot trade them. You cannot, buy and sell them. However, they hold tremendous value because for every 3 stamp NFTs you collect, you can exchange them for a special NFT called Learn to Earn Time Capsules NFTs. Now, these time capsule NFTs are actually tradable, and essentially they capture the moments that you've spent, while attending these AMAs, and so they hold some value. So you can actually trade them, and also you can actually open them and receive anywhere between 6 to 50 USDT inside each time capsule NFTs. So, we're very, very excited to launch this new program for our audience today. So please check out the pinned tweets for more details in an article that we've provided to learn about the Learn to Earn program and explore how you can begin, accumulating your stamped NFTs. So we're very excited to be releasing this new program. And so without further ado, we would like to, jump into the AMA. Like I said, we have a very exciting topic today. But let's start with a brief introduction for our guest speakers today. So let's start with Victor, who's a co-founder of Manta Network. Victor, can you tell us about yourself and your company, and the company or projects that you represent?
Hello. Can you hear me?
Yes, we can.
Hello? Yeah. Okay, perfect. Thanks for hosting this. And it's pleasure to share in like a BitMart Twitter space. This is the first time. Hi everyone, I'm Victor. I'm co-founder of Manta Network. Manta is a privacy ZK layer for enhanced privacy for all of the use case in the Web3. We are basically start from 2020. Back in the time, ZK is not that hype, and there's too many use cases for ZK. One is enable like Ethereum or other layer one faster and cheaper, but there another is like mainly focused on privacy, and that's what we are doing. Basically, right now we have like privacy payment and privacy ZK, SBT, NFT, this kind of credentials, KYC on our platform, and we have more than like 300k ZK SBT minted within these 2 months, and we have great partners like Linea, Arbitrum. Manta has raised like 40 million from like Polychain, Binance, etc. I think that's everything. I'm definitely not the expert in like LSD, but I'm just like I've been like doing some research myself, and this is a really interesting area these days. There's some LSD related on the privacy use cases, but I will definitely can share it later.
Thank you so much. Thank you for sharing like an overview about your project. Like you said, we are all here, we're all learning. And it's a very, very interesting topic. And, we're just gonna, learn together and, and see how this, LSD innovation, impacts DeFi. And and very, very exciting milestone for you guys. You guys have accomplished a lot, since launching. So congratulations on that. So yeah, thank you for that brief overview. Next, I'd like to pass it over to Balal.
Hi there. Good evening. How are you doing?
I'm doing great. Thanks for joining us today.
Excellent. Thank you so much for the invitation. And I love this topic as well. Very interesting. It's kind of a bleeding edge kind of topic. So I think a lot of the users might not really know what it is. And there's a lot of experimentation going on in this area. So to introduce myself, my name is Balal, and I'm one of the co-founders of ZKEX. And in very simple terms, ZKEX.com is very similar to a CEX, but we're a self-custodial and decentralized exchange. So what we believe is that in the future, as crypto grows as an industry, we're still quite small as an industry, but as we grow and become more mainstream, then there will be different kinds of users who want to trade in different ways. So I think most people probably want to use a CEX to trade, especially the new people who are new to the industry. But as people become more mature, they may be looking for an alternative for them to self custody, and maybe they want to just have the decentralized kind of way of trading. And right now, there's a real problem in the industry that you have to use all these complicated ways to trade on a decentralized way. So what we are building is a way for you to buy and sell any token you want using any collateral you have on any network. So you don't need to think about bridging. You don't need to think about worrying about where my money is. Essentially, is it on Polygon? Is it on Ethereum? Is it on BNB or anything like that? You just buy the token you want directly. And this, from a user's perspective, simplifies everything, makes it really simple for them to trade in a decentralized way. But on the back end, just like how Victor mentioned, that ZK technology is enabling all these new use cases in crypto. So adding to scalability and privacy, another use case is security, multi-chain security, and also interoperability. So what we think is in the next 6 months, you'll see a lot of multi-chain new projects coming out using ZK to mathematically verify that, guarantee you that you will not lose your money. And a lot of people have lost money recently in multi-chain trading. Bridges have got hacked. Billions of dollars have been lost. So we think this is a really prime area for innovation of using ZK. So yeah, it's a new kind of exchange, and it's going to be launching later this year. But yeah, I can talk about more ZKX a little bit later. But yeah, thank you so much for this, and we're happy to talk more about LSDFI.
Thank you for giving us that overview about ZKEX. Definitely a very interesting product you guys have going over there. And yeah, you're completely right. And there's a lot of complexity when it comes to especially when it pertains to DEXs and decentralized exchanges. So providing that simplicity, especially for new users, is very, very vital. And just basically abstracting all the complexities away from the user, and letting them to be able to access the tokens or that they want to access without having to do a lot of bridging and a lot of complexity is the very, very powerful use case. So yeah, thank you for joining us today, Balal. And next, we're gonna pass it over to Woody from Nest Protocol.
Hi everyone. This is Woody, and just glad to be here. This Twitter space, and yeah, we have been in the DeFi area since 2018, and yeah, let me give everyone a quick introduction of what Nest Protocol is doing. Nest Protocol is DeFi infrastructure, and what we want to build is everyone they can create the derivatives they need on chain very easily. So also as ZKEX just said that we also believe there will be some users the view needs decentralized trading. So we want to provide this kind of decentralized trading infra to everyone who has this need. And in this in the on-chain derivatives area, the supply of the derivatives for the risk hedging or for the arbitrage actually is not enough. So what we trying to build is that we want to provide this kind of derivative infrastructure that everyone there will be infinite supply of the on-chain derivatives as everyone need. And we also have our own decentralized perpetual exchange, and it's called LSDFI. And the user model is that everyone is treated directly with smart contract, not with other counterparties. So the smart contract will take all the risk of the traders, and as users, they want to open the long position of futures. They need to burn a certain number of nests, and if they want to get the settlement, smart contract will issue additional Nest token to them. So in this case, all the Nest holders will take all the risk and also take all the benefit of the transaction fees and the traders lost. Okay, That's all, and it's very glad to discuss with you guys with LSDFI. And I'm not expert on this area, but I can provide some opinions on DeFi. Thank you.
Thank you. Yeah, thanks for providing that info about Nest protocol. Yeah, it's a very what you guys are doing is very innovative. Like I said, the next buy decentralized perpetual exchange is very sophisticated, I would say. And just looking at your website, you guys have had over 4 billion total trading volume. So very exciting to see what you guys are building over there at Nest protocol. So yeah, thank you so much for joining us. And and we'll pass it over to Alson. I'm just doing a check here. I don't think Alson has joined us yet. Alson, are you there? Yes, I think we're still waiting for Alson to join us from the head of marketing at MUFEX. But we do have Gareth, the DeFi architect at TENET. Gareth, thank you for joining us today.
Thank you very much. Just to give a little bit of background on TENET, for those that haven't seen us yet, we're building an ecosystem of LSDFI products on our L1 network, which is built on the Cosmos SDK and fully EVM compatible. And we're allowing users to restake their LSDs from other networks to secure the TENET network. And then they can use those restaked LSDs in our native LSDFI apps. So they'll be able to mint a stablecoin backed by those LSDs and use them to form omni-chain meta LSDs for use across the DeFi space.
Thank you, Gareth. Yeah, we definitely would like to dive more into what you guys do, and because more specifically, I think you guys are more specialized when it comes to the LSD ecosystem and LSDFI. So we're glad to have you here, and to learn from you and to share your expertise with our audience today. So so we are going to actually jump into the questions for today. And so the first question here is, how does LSDFI actually compare to the current state of DeFi? What are some of the pros and cons between the two in your opinion, based on what you've learned and based on what you've seen so far? What do you think? How do you think they both compare, LSDFI and DeFi? I'm going to start with Victor.
I feel this is a huge market. First, I have to say, it's really interesting. You can see all of the major proof of stake, layer ones, or maybe some they say layer 0. They all have around more than, or even layer 2s. They all have around around 60, 50s, percentage of token are stake in their network. That's a way to keep the network security, and they can get extra reward. And this extra reward is based on the consensus, and not something like a Ponzi way to generate it. So that's organic rewards are going to the stakers, and this happens on Ethereum right now. And after the all of these upgrades like Ethereum 2.0 last year, and based on that, I find right now there's only around 19% Ethereum stake in the network, but there's a big potential based on compared to other layer ones, and also it's a huge market. If the rest, let's say 30% of Ethereum stake in the market, it can be really crazy number. But right now we already see some giants like Lido working on this, and there's some other project build on top of it, get more use cases, and like especially these days, everyone can see the Mavic, like they're doing really great on the liquidity providing for the LSD assets, and this open a new market, basically enable certain higher risk but higher return in the DEX trading for this liquidity asset. That's something really amazing. And also Curve is a big player. I think there's already pretty much big players in this market, and they're doing pretty great. And at the same time, I think there's also have some new technology on top of this. I'm really bullish on risk-taking, which is from Aiden layer, and that's actually something potentially a game changer as well to change the landscape. That's everything from my side.
Yes. Thank you for that insight. Yeah, we're definitely an on top market here, and we're actually going to dive more into that. When it comes to the kind of the difference between what is currently in the LSD market versus LSDFI. LSDFI. I don't think we've seen that transfer of value from the state assets to the actual DeFi LSDFI protocols. So there's still a room for opportunity there, and we'll be diving into that here in a little bit. But the same question to you, Balal. What do you think? How do you think LSDFI compares to current state of DeFi?
Yeah, thanks for the question. Very interesting. So the question was, how does it compare to DeFi? But actually, I would argue that it is kind of a subset of DeFi, because the kinds of users who are going to try this out are the ones who participate in other DeFi protocols. They'll kind of like consider this as another way to kind of use their assets and earn more money. So what's been happening in the LSDFI in the last couple of months is those users who are into DeFi in general, people like that are always chasing yield. They're always thinking of new ways to make more money, essentially. And the really interesting thing is that in the last 1 month, I believe, we've come up to I think the TVL is at 400 million, and it was 200 million just a month ago. It's doubled, and before then it doubled again. So that in itself, that massive growth has caught the attention of a lot of people. In crypto, narratives are really important. The reason things have become popular with the mass market is when it catches a drift. Like we had the meme trading season some time ago, and it went away. And the question is is LSDFI just catching a drift right now, or is it going to move away? So basically, this is a new concept in DeFi space. But the reason why it's catching more attention by quite serious people is it has the potential to revolutionize the way people that are actually interacting with DeFi protocols. So to very sum it up to the average guy who's listening right now, LSDFI basically allows users to stake their ETH and earn rewards without needing to lock up their tokens. So it means that users can still use their ETH in other DeFi protocols, and also at the same time also still earning their staking rewards. So the pro of this is that it's actually quite more liquid than traditional staking. That's why it's quite attractive to a lot of users who are already staking. This is another way for them to stake, but also earn have that liquidity. So the users can earn the rewards of staking without needing to lock up their tokens, which is actually for some tokens is quite restrictive in terms of your liquidity. You essentially kind of say goodbye to your tokens for some time. It means that users have a flexibility with their ETH. They can do something with it now. So they can essentially use it in different ways. The bad thing about LSDFI is that it's a very new concept, and it's a little bit scary for most people. So there's still kind of some risks attached to it. Maybe something will bad happen in the future. We don't know because it's still new. Because the smart contracts that have been built and are launched are still very complicated, and there's always a risk of hacking and exploiting. That's the main reason why people are not. The people in it right now are kind of the more risk-taking kind of people. So that's what it is. And also the market is relatively small right now, and so there's not much liquidity as there is in bigger in the DeFi market overall. So for the people aping in, it's like the narrative is catching drift. So it's a matter of time for people to go in. But it looks like this, the curve is like quite steep in terms of the adoption. So if we have this conversation again in 6 months, it'll be really interesting to see what actually happened. Did it drift away or go away? Something bad happened? Or is it like a solid part of the DeFi world now that's everyone considers to be quite normal? So it's a lot more to talk about, but that's a very quick overview of the pros and cons of DeFi, of LSDFI versus DeFi.
Yeah, certainly. Thank you for sharing both the pros and cons with us. And yeah, you're absolutely correct. You cannot deny the kind of the increase in I guess TVL that has pretty much doubled every single month since the whole concept of LSDFI came to the scene. And you're correct too. When it comes to bleeding edge technologies like this. It exposes, some risk, obviously, but it also introduces some opportunities as well. So as we continue to build here in the blockchain ecosystem, it's still up for debate to see how this, becomes a dominant narrative, moving forward. But, it's still good to see a lot of, builders, building in this particular sector of the market. And providing value to holders, who stake their assets and still want some value from that staked asset. Because pre Shanghai and Shrapnel update, you just have your asset just locked and illiquid. But now we can actually do something with it. So thank you for providing that insight. Next, we're going to pass the same question over to Woody.
Hello. I totally agree with what ZKEX just said, and LSDFI is just a part of the DeFi, and I think the major difference is that the LSDFI's underlying asset is different. If you compare with the traditional DeFi's lend and borrowing, and the only difference is that if there's a traditional, if you use a lender, you use some kind of tokens to do the lend and borrowing and to relend and reborrowing to generate derivatives. The only difference is that the tokens you lend or did not generate the staking income from you. So I think that this is biggest thing that LDFI provides, just a different underlying asset, and this asset, because of POS, is more and more popular. So this kind of asset is everywhere on chain. So make this market is kind of big. I think the only disadvantage of this business is that it will create more risk in the DeFi, because everyone because you can do the risk taking and borrow and risk taking against this business. It may cause some systematic risk to the whole system.
Those are excellent points for sure. And yeah, you're absolutely right. The kind of the key difference here is the underlying assets that has been used in the DeFi protocols. In this case, it'll be the LSD or LST, the liquidity staking tokens, as opposed to the kind of the main assets. When it comes to traditional DeFi, and obviously, like Balal said, it's still the same. Pretty much the same thing, and we're still talking about DeFi here, but it's actually the underlying assets, providing that extra value to people who stake the ETH or BNB. This is kind of the key difference here. And you're also right about the risk that it obviously presents, and that's something we're gonna discuss as we move further along the AMA. So thank you for sharing that insight. Next, we're going to bring Gareth, and obviously Gareth, this is kind of what they specialize on, LSD. So very excited to see, to hear what you have to say, when it comes to LSD.
Yeah, absolutely. And I agree that I think one of the key differentiators with DeFi is really the underlying assets and the yield that's being born on those. And that opens up some interesting opportunities in terms of things that wouldn't be capital efficient without that yield being there can suddenly be capital efficient in the DeFi space. And I think that's something where we'll see a lot of new protocols that are building on top of that. But I think one of the other main differentiators is some of the players within the LSDFI ecosystem. So in DeFi, you have a lot more kind of degens that were around during DeFi summer. They got used to the concepts of yield farming, staking, LPing, lending out on decentralized lending platforms. Whereas in the LSDFI space, you have a couple of groups of players that are maybe less familiar with these DeFi terms and come from a more either traditional or retail background. So first you have the validators, and mainly they are institutional grade validators that are running nodes. Maybe they may have been in blockchain since before really DeFi existed, back from the days of delegated proof of stake coins, etc., running validators there. And they have their whole systems in place and they know how to do that. But I think they're a little bit less familiar with some of the DeFi concepts. And so when it comes to the more complicated aspects, such as restaking or minting stable coins and some of these looping strategies for the yield, etc., that's something that you really need to take the time and explain to them how it works and the risks involved and how they can mitigate it from their business risk side of things. And I think linked to that, there are a lot more custodial solutions in the LSDFI space. So you see a lot of the centralized exchanges have their earn programs where they themselves are then staking it to validators. And if you're trying to capture some of these custodians to come into the LSDFI space and start utilizing those LSDs within DeFi protocols, again, I think there's a big gap in terms of the education curve there for how to onboard that more institutional capital, that custodial capital, in a safe way that they trust the underlying protocols, they know what they're doing, there's safety parameters there. Then they know they're not going to get their users' assets liquidated. Obviously, there's issues, particularly with what we're seeing in the US around regulatory compliance, etc. A lot of them would be quite nervous, I think, about potentially commingling funds into pools in decentralized contracts. So I actually think that that's also, because of the nature of some of the players, why we've seen less adoption from pure LSDs over to the LSDFI side. And I think there's a lot to be done there in terms of education and simplification for onboarding non-DeFi natives to the LSDFI space. And I think that will be the main catalyst for the growth in the space.
Yeah, thanks for sharing that. Yeah, you're absolutely correct when it comes to the education part. It's still, it's still very, I'll say nascent industry and nascent technology. And, for especially when it comes to the, I guess, like you said, to the non, core DeFi natives, maybe some institutions or custodians, it's still a bit of a learning curve, about all the kind of the money Legos that goes on with, LSDFI and DeFi is already complicated, but when you top it, with something such as LSDs, it makes it even more complicated. And but yeah, thanks for sharing that. And I think that's a good segue to our next question, because I remember you touched on the fact that there's still some hesitancy when it comes to transitioning from regular DeFi to LSDFI. So like we know, LSDs, the actual staked ETH, staked assets, currently holds around I would say roughly 17 billion market cap, especially when you look at staked ETH as the dominant player there. While LSDFI accounts for roughly between 2 to 3% of that market. And as I think Balal pointed out, is around roughly around 350 to 400 million in market cap or value. So I know Gareth, you touched on this, but for the rest of our guest speakers here, what do you think is the reason behind the hesitancy for capital to flow from LSDs to LSDFI or LSDFI? Yeah. We'll start with Victor.
Sorry for that. Can you repeat the question again?
Yeah, so we're still seeing a hesitancy for capital to flow from LSDs to LSDFI. Why do you think there's that hesitancy for capital to flow to LSDFI protocols?
Okay, I see. Yeah, I think I think previous speakers already share there's pretty high entry barrier, and I think security is another issue. Those two are mainly issues. I think for the major barrier, stop the users get into it. But I think existing on-chain users, security is the major issue. I mean, right now I feel like Lido and other players is still pretty centralized. That's basically my self-concern. But I mean, most of the users from centralized exchange, they have no idea about how to use MetaMask even. That happens a lot, in DeFi summer, and LSD is the same. So I feel this entry barrier, it takes time and need more education, and also need to have better user experience. I do have a good expectation on the account abstraction that can enable lower the entry barrier significantly, and social recover all of this. Based on this user experience, I think it won't be it won't be that hard for existing centralized users using the MetaMask or using the Web3 wallet. Yeah, I think that's kind of the idea. I think basically the UX side and the front end side, that need a lot of improvement to improve the real usage of the this kind of technology part. But I mean, it's not that really complicated technology for the LSD. But if we want to make it super decentralized, it do need a lot of effort. And also, I mean, I also think it's and the institution get into it can help a lot, because the normal user, if even really use this kind of product, have better experience, but it's still pretty risky, and also it won't have that much liquidity, the major liquidity coming from institutions, I mean, in this space. So I think that should be really important. Thank you.
Yeah. I think you brought up some very key points there. Like security. Obviously, user experience is another barrier to LSDFI protocols. And yeah, I think those are excellent points. I think we'll see more of the bigger players try to simplify things to help onboard the not so advanced users when it comes to interacting with these protocols. So yeah, those are definitely good points that you brought up there. Yeah, I'll pass the same question over to Balal.
Yeah, this is a really interesting question. So there's several reasons why there's been some hesitancy from the market to move from LSDs to LSDFI. And I think first off, it's such a new concept. I think quite a few of us, as we did our introductions, we said, we're not experts on LSDFI, even the crypto native people who've been here for a while. It's so new. And so behind default, everyone, whenever they approach something new, are a little bit scared of it, meaning they don't understand the risk, so it's better to be safe and wait. And that's even amongst crypto native people, quite a few people are waiting to see what's going to happen. But think about the average user of crypto, the retail users who are currently using is when they come across something like this, it's so complicated that they will think, what is this? Have no idea what liquidity, staking, derivatives, FI means. Like, it's just so ridiculously out of their kind of range of understanding that we have to kind of balance this and understand that this is quite a technical and quite a financially savvy concept, that really degens are the ones who are going to do this. But that's still quite a significant market of people, because even though the LSDFI is not as widely adopted as DeFi staking, there is no reason why that 3% of people who are currently doing staking can't move into this, because they're staking their ETH already. Why can't they utilize that ETH in a better way and still get the benefits of the staking? So I think that's why people are so bullish about this, because even staking itself is not that big. It's not that big. Not everyone stakes. Very few people even stake. But that 3% could turn into like 30% or 50% in the future. Who knows? But so that could be billions and billions and billions of TVL still to come. And probably that will be the case. I don't think this growth will slow down for the rest of the year. As staking grows, LSDFI will also grow with it as well. And we've seen this kind of unlock, essentially. And I think the third reason is that, to be honest, we have to kind of be cautious that even a lot of people who stake, they do it because they want the security of locking out their tokens for a period of time. They don't want to think about yield and things like that. They just want to throw their ETH away into a bin and come back to it in a year or two. It's a kind of a form of hodling in a way. So they don't want the risk of losing their tokens if something goes wrong with the protocol, and it could definitely go wrong. Imagine losing all your staked ETH because you took a risk with LSDFI. You'd feel so silly. So I think understanding the risk parameters of people is really important. I mean, even at ZKEX, we're really we're bullish about ZKX, right? But then we think, you know what, the average person doesn't really want to hold their tokens. They would prefer to put it in the bank or have someone else have the responsibility of looking at their assets, because they're scared of losing their assets if they self-custody. So we have to understand the risk parameters. And Victor very wisely mentioned lots of small things need to improve the user experience and to reduce the barrier of entry. But that's a 5 to 10 year project, to reduce those barriers of entry. We have to be cautious in terms of our optimism. So basically, right now, LSDFI definitely has the potential to grow very, very popular, take over. More people who are staking ETH will move here. Plus, staking ETH will grow itself, so that will accelerate LSDFI. But we have to balance it with the risks that people are willing to take as well. So it is going to be a balance. But I think I'm bullish for this year. Definitely, this is going to be really good. But just imagine later in the year, if one protocol was hacked, the entire sector would be affected. It just takes one bad developer to ruin an entire sector or entire industry almost. So hopefully all those protocols are honest and decent and capable. But honestly, one bad mistake later in the year could destroy this entire, at least damage it quite significantly. So it's really about that risk parameter that people are willing to take. And right now, most people are a little bit cautious. So that's my answer.
Yeah, that's definitely a part of it. And that risk factor is it's like you said, it's a very, very new concept. So a lot of, I think, even what you would consider experienced and savvy DeFi players are kind of waiting and seeing and to see what happens in the next 2 to 3 months or the next quarter when it comes to LSDFI. So yeah, definitely great points there. And like you said, yeah, just one mistake, one exploit will definitely, bring some negative, impression about LSDFI, but, that doesn't necessarily mean that, it's going to go away. We've seen exploits, in DeFi several times, but, you still see like developers and, individuals still, bullish on the concept of, blockchain and just, decentralized finance in general. So, yeah, definitely great points that you brought up there. Yeah, I'm gonna pass the same question over to Woody.
It's an interesting question. From my personal opinion, that it's all about the risk, because if you only do the LSD, like on the Ethereum, your average return is around 5% to 6%, and if you do change to LSDFI, your your APY can be over 10%. So it is, the money cannot be like come from nowhere. So you must take some else risks that in the whole procedure. So as for me, that I will see that like staking on the Ethereum will be a risk-free interest for me. And if I want to try LSDFi, I can maybe double my my interest yearly. But what's the risk I take is maybe the liquidation risk, or my account got hacked. I have a high risk to lose all my funds. So so in this way, I'm still watching this. So I don't want to try. And this is also the Victor and the ZKEX just said, security issue and some other risk is the reasons that capital hesitation to join. Yeah, because you cannot just print money by this kind of derivatives. You can print more money out. You must take more risk than others if you do this way. Yeah, so thank you. Yes. Host. Is host mute yourself? Anyone else can hear me?
I can hear you.
Yeah, I cannot hear the host.
Yeah, I can. Yeah, for whatever reason, my Twitter app just froze. I don't know what happened there, but can you guys hear me now?
Oh yeah.
Yeah. Sorry for that that technical difficulty there. Sorry. Can you, Woody? Can you be so kind to kind of repeat your question, just in case there was some technical difficulty there? Woody, can you hear me?
Oh yeah. Sorry, I just muted myself.
Yeah. If you be so nice.
Yeah. What I just what I just said is that you cannot print money yourself, but just use a different financial product. You must need to take more risk if you want more return. So I think that's the main reason that the capital hesitate about the LSDFi. The whole on-chain derivative market is so immature. In the very early stage, there is a many risk of the security and also the liquidation and systematic risk. So yeah, for the big money, the interest is now very important. The funds is more important. Okay.
Those are definitely very, very valid points. Obviously you talked about the return in the average, just taking your ETH, the return is anywhere between 5 to 6%, and LSDFI, is about 10%, plus, and obviously that's involves some level of risk that you're taking, and some institutional clients may not be so interested in that extra like 5%. But still, it still begs the question, how can we solve this challenge? Because obviously, we can still unlock that value in that staked Ethereum or staked BNB, and solving that, I guess, that security risk problem or issue kind of was kind of the key thing holding the LSDFI protocols back in a lot of ways. So Gareth will be the one of the best person to ask this question. You already touched on this briefly. So what do you think is the hesitancy here for capital flow from LSDs to LSDFI?
Yeah, absolutely. I think, as well as what I mentioned in terms of the education factor there, and needing to make it very secure and easy to onboard institutional players and more TradFi players, I think one of the key factors, which is very tied to the risk question, is the yield question as well. Because at the moment, if we've been in a bear market in terms of prices, yield is even worse. Like back in the day, people were getting 50 to 100% for farming early on Curve, etc. Now you're lucky if you're getting 3%. A lot of the pools are down to 1%. And that's for Curve, which is relatively safe, let's say, compared to newer protocols. The contracts are battle tested. They've been through multiple audits. Many people rely on them, etc. But I think if you're an institution and you're sitting in 4 or 5% staked Ethereum, you've assessed the risks of that. You've got sign off from your risk committee, and you've accepted that and the associated validator risks, etc. If you're scraping around for an extra 1 or 2%, or maybe it's 3 or 4%, but in a newer contract with a lot more risk attached to it, I think you're going to struggle to get sign off for that. Whereas if you're looking at 20, 30% additional on top of your 1 or 2%, and yeah, there's going to be some risk associated with that, but maybe you do it with a portion of the capital, and maybe you do it across a variety of different protocols, and you come up with a diversified basket, so you're not exposed to a single smart contract with your entire portfolio. But I think a lot of it comes down to, is the reward worth it in terms of the risk that you're taking on with all of these different smart contracts in the LSDFI space? And I think that's something that, as we move away from a bear market, as yield becomes more bullish again, as new opportunities arise in terms of looping, etc., maybe some of these contracts are older, they become established within the industry. I think that's when you'll start to see a move over from simple LSDs into the LSDFI space, once that risk reward is really balanced for the players there.
Yeah, those are definitely excellent points. It's at the end of the day, it's we have to ask the question: is the rewards, worth it, to make that transition? For some people, that's the case. Especially like you said, if the current rates, APY rates from established players like Curve, is between 1 to 2% or 3%, and when you consider things like inflation, are you really staying above inflation when it comes to the rewards you're getting from your assets? Obviously, that's high, APY and high interest will always be something that people will consider, to kind of take the risk on. So yeah, definitely interesting. And like you said, as we continue to see how the market plays out when the bull market gets here, where people are more willing to take risk. It would be interesting to see how all that factors in terms of the capital flow to LSDFI. But that's where the opportunity lies. When it comes to being early in these new innovations. So yeah, very very good points there. So right now we're about halfway point to the AMA. I would like to take this opportunity to inform our new listeners who are just joining us that we did announce the Bitmart's our new flagship Learn to Earn program, which is a unique NFT-based initiative designed for learners like yourself. And by actively participating in our online AMAs and basically attending and engaging, you have an opportunity to win our stamped NFTs, which are NFTs that marks your proof of attendance and engagement. And be sure to check out the pin tweets on how to collect these stamped NFTs. You do need to fill out our Gleam form, and you also need to, basically attend and stay, for at least 30 minutes during the AMA. But the stamped NFTs, if you can collect 3 of them, so if you can attend 3 AMAs and meets the requirements, you can exchange those stamped NFTs for Learn to Earn time capsule NFTs, which are, tradable and which contain anywhere between, 6 to 50 USDT in each of them. So again, while the stamped NFTs are not tradable, the time capsules NFTs are tradable. So just something to note there. So, it's your choice whether you want to open the time capsule NFTs and find out what is inside, or you can just list it in the Bitmart NFT marketplace and, for other people to buy and sell, so you can actually trade the time capsule NFTs. So yeah, jump in, check it out, accumulate as many Snap NFTs as you can, and explore the exciting opportunities that awaits you there. So, let's continue our discussion. I think we've kind of talked a lot about the risk associated with LSDFI. Would you say that this, when it comes to LSDFI, the risk is, I guess, less, it's less risky or more risky, to participate in LSDFI compared to traditional DeFi protocols? How do you think the risk compare between both of them? Yeah, I'll pass that to Victor.
Hello, can you hear me?
Yes, I can.
Yeah. Okay. Yeah, it's the same risk. It's mainly the major risk is the exploded. But I think the good thing is I feel the risk is still like better than the compared to the out chain. Like if you do the LSD like on Ethereum, it's actually much lower risk compared to the you do it on the other chain um like let's say Avalanche or others, because they have like several more risks. Like the bridge can get trouble, because if the bridge get trouble, you are not going to be able to bridge to Ethereum, and then even the token on other chain have value, it goes to 0. And they have the smart contract risk for the like swap or lending. That's the same risk of LSD, and also the chain can be exploded, and if it's get attacked, it's also get risk. So it's definitely more risky to do it like to use any like DeFi product in any other chain than Ethereum. But that's why they give better yield. But compared to layer 2, it's the same risk. It's all the application level risk, and also there can be some financial risk. Like for the liquidity side. If there's no liquidity, it can get trouble as well. But I think that's actually been like most of the case it's okay. It won't be that big liquidity issue right now. Yeah, that's from my side.
Yeah, thank you. Yeah, definitely. There's the risk on both sides. LSDFI and DeFi is still, that's still, so long as you're dealing with smart contracts, there's still that risk of, losing assets. But yeah, thank you for providing that information, that insight to us. Next, I'm going to pass it over to Balal.
So yeah, this is a really interesting question to dig into the details of potentially what is up with LSDFI. And I think a lot of people will look at this and they'll think it's another type of money Lego. So there'll be a bit of pessimism for whenever someone looks at this. And basically, DeFi Legos or money Legos are, it's the idea of composability, that you are able to combine several protocols that are already doing something, and you can essentially create a brand new protocol or service built on top of them, which is a beautiful thing. But also there's the risk of having that chain of one protocol that's composable into another one, and then money Legos can get out of hand sometimes. And if one link in the chain breaks, the entire system collapses. So that, I think someone mentioned earlier on about the systematic risk. So people may look at LSDFI as another money Lego and they'll be very hesitant. A lot of people lost a ton of money a year or two ago. Lots of my friends lost money playing around with DeFi and taking risks, trying to get extra yield, do yield farming and stuff, and they lost money on lots of different ways. So specifically with LSDFI, I think a bit of education that it's actually, especially on Ethereum, just how Victor mentioned, on Ethereum, it's a slightly safer choice than going for an alt chain, definitely. And specifically, there's three risks. Even on Ethereum, there are three risks. First off, there's a risk of smart contracts that they're relatively new. One will probably get hacked or exploited in the future. We can't say that there won't be. Somebody will make a mistake in the future, and it could be hacked or exploited. And how big of a problem it occurs, how many millions or billions are lost, we don't know yet. And we know that's a risk with any DeFi protocol, but a lot of DeFi protocols now have been kind of road tested and for months or for years, so they're relatively safe. But the LSDFI are literally months old, so there could be some 0-day risk that attack that could happen that we never knew about. So the second risk is regarding liquidity. So there's really not enough liquidity in the LSDFI market. So it could be quite difficult to sell some LSDFI tokens at a fair price. You could lose a lot on slippage and things like that. So that risk is in DeFi, but it's a less of a risk because the DeFi market overall, the staking market, is much, much bigger. It's, of a factor of 30 times bigger than LSDFI is at the moment. And the third risk is regarding the market risk overall. So the price of LSDFI tokens could go down, which means that the users would lose money. And that's a risk again, that's with all crypto, but it's in particularly because LSDFI are new tokens, they're composable, so built on others, but they're still new. So just how we've seen, unfortunately, that Sway, is a new alt one, and there's so much hype about it, and then now it's crashing because there's actually not much usage behind it. So the new tokens anything new is always risky. People always prefer the things which are slightly older and reliable and road tested. So the LSDFI tokens could be quite risky. So there's a lot of similar risks with DeFi as an overall concept, but since it's a new thing, there's just that uncertainty how it's going to perform in the long term. So yeah, that's my overall answer.
Yeah, very, very. Yeah, those are great points. That I think that really explains the kind of the difference when it comes to risk between traditional DeFi and LSDFI. Like you pointed out, because it's very new, there's some smart contract risks. Obviously, compared to other more established players, you have the liquidity issue as well. Most of these protocols don't have enough liquidity, which makes it vulnerable to just maybe market manipulation by some whales or some other factors like that. And also price volatility, like you said, is also another issue as well, especially when you start talking about using them as a collateral, debts, protocols, to use them as a way to get loans and things like that. That price volatility can actually lead to liquidations and things like that when it comes to assets that are backed by the LSD tokens themselves. So Very, very good points there. I'm going to pass the same question over to Woody.
Yeah, I can make this answer very short. I think the LSDFI and the traditional DeFi, they have the same kind of risk. The only difference is underlying assets and the systematic risk. DeFi also will have, and the security risk. DeFi also will have. Yeah, I think others that previous people already said enough. Yeah.
Yeah, thank you. Yeah, systematic risk definitely is a huge part of it. Yeah, very short and simple. I like that. Thank you so much, Woody. I'll pass that same question to Gareth.
Yeah, absolutely. So I think in terms of the risks, obviously it shares a lot of the risks from the traditional DeFi space in terms of smart contract risks and exploits, etc. But I think similar to the different players being involved, there's different risks that come with that. So if you look at protocols like Lido, etc., you have validator risk there. And the more that you centralize into a single LSD issuer with a subset of validators, the more you actually centralize the underlying proof of stake networks themselves, and the more contagion there is if anything happens to, let's say, one of those validators going down or getting slashed, and the effects that that can have on the protocols. And I think that's one of the only reasons why people wouldn't look to move into LSDs is being able to diversify that validator related risk. I think is quite a big one. And also being able to decentralize aspects of that would be a good goal in the long run to obviously increase decentralization of the networks. And I think there's also factors of LSDFI specifically beyond the LSDs, where there's maybe slightly different focal points to the wider DeFi ecosystem. So obviously, once you have these LSDs and actually the underlying tokens that are being turned into LSDs, being able to bridge those becomes a lot more important than, say, a DeFi protocol, which, it may be multi-chain, it may be omni-chain. You might want to use it on two different chains, but DeFi protocols tend to be more segmented than LSDs, where there's an actual need to move tokens from, say, one network where you're creating the LSD to another network where the LSD will be utilized in LSDFi. And obviously, bridges we've seen over the years have been one of the main points for exploits and hacks. So I think strengthening that and using best practices to move to an omni-chain approach is definitely one of the key areas for risk mitigation in LSDFi. And I think the other side of it is that there's a lot of nuances with the smart contract coding from the LSDFi perspective. So, for instance, what we've seen with stake teeth versus wrapped stake teeth is it becomes difficult when you've got a token that's being rebased or that's having new tokens sent to the address because it's earning this yield, and how you account for that yield creates all sorts of problems from a smart contract perspective, where you need to be able to accept that yield and assign it to the user. And so it's a whole new suite of tools that devs need to get familiar with when they're building LSDFi products, and a whole new suite of issues that they could face if they get that wrong, and having trapped tokens, or I don't know if people remember in the early balancer days when people could steal all of the rewards from a particular pool by calling the function there. But I think we'll see a lot more issues like that if maybe even experienced DeFi devs who are inexperienced in LSDFi start moving over and coding up LSDFi contracts without thinking about the yield-bearing nature of the underlying tokens. So yeah, I think that's also one of the main differentiators in terms of the risk, and one of the areas to focus on.
Yeah, that's a lot to unpack there. There's a lot of value that you just shared there. It's yeah, I mean, the first thing that you said that just caught my attention was the centralization risk. Yeah, I think it's a kind of a catch-22, kind of a confusing conundrum there, where you want the security and the assurance, and by so doing, rightfully, staking on more established, LSD protocols, but to your point, like the Lidls of the world, that introduces some kind of centralization, to by relying on a single kind of entity, so to speak, to produce those rewards and LSDs. So I thought that was a very good point. So it's good to see other protocols come up, Rocket Pool, Frax, and like TENET, like you guys as well, to bring that decentralization into the picture. I think that's a very, very important aspect of all of this. And to the point you also made, and I think Bala also made this point as well, the variability that is that is introduced due to the complexity of tracking the rewards, moving funds from one protocol to another, all that stuff. While it's innovative, it also definitely exposes funds to exploit and things like that. So again, we're talking about billions of dollars here, and and a lot of people's hard-earned money. So obviously it's a very, very risky I guess endeavor to embark upon, but still exciting nonetheless. Yeah, thank you for sharing those insights with us, Gareth. So we're gonna move. I think we have some time to before we wrap things up. We're gonna move over to some Q&A. Actually, due to time constraints, we can only basically take one question from our audience today, and that question is which LSDFI protocol are you most bullish on and why? I'll pass that over to Victor to start us off.
I mean, I will say Asian layer. It haven't come up yet, but I mean, it have a chance to be the extremely big, because it's open a new market. But the existing one, I feel it will be really hard for anyone compete with Lido. Yeah, that's it. Thank you.
Sorry, I didn't catch the name of the protocol. What was it again?
It's Eigen layer. It's the EIGEN LAYER.
Okay, interesting. Okay, I'll be sure to check that out. But yeah, very, very interesting. I'm going to pass it over to Woody.
I don't have much experience in this kind of LSD protocol, so no investments suggested to the users. So yeah, just do your own research. Okay, don't trust anyone else to sharing the protocol's name. Yeah.
Yeah, definitely do your own research, and obviously that's why we gave our disclaimer at the very beginning. And yeah, that's very good advice. I'm glad you said that. Always do your own research. I'm gonna pass it over to Gareth.
Yeah, absolutely. I mean, probably a bit of a loaded question to come over to me as I'm working at TENET. And I'm pretty bullish on what we're doing in terms of the restaking and the decentralized stablecoin, etc. If I had to pick other projects in the LSD space, I think we're working with a lot of them over on the TENET side. I think there's some guys who are doing great things in terms of bringing the omnichain side to LSDs. Layer Zero really doing a lot on that side of things. We're also working with Anchor to bring LSDs to chains that don't currently have them. And I think that's really important to bring more access to the ecosystem. At the moment, a lot of projects like Eigenlayer, which was mentioned, they're just focusing on Ethereum and restaking Ethereum. And that's such a small part of the overall proof of stake ecosystem in terms of the users and the different protocols there. So I like the idea of opening that up and opening up these opportunities to LSDs from other networks. And then I like what a lot of the protocols are doing in terms of the meta LSDs to basically solidify the liquidity from all of the different LSD issuers into a single token that can really be usable. So instead of having to deal with Stake Teeth, Rocket Pool ETH, Fraxeth, etc., you would just have one token to deal with that. And we're actually working with one of the current protocols to bring that over to the TENET LSDs as well. But yeah, I think it's an ecosystem that really thrives on collaboration, and I think projects that utilize other LSDFI projects in their ecosystem will really be the winners overall. That I think it's something where we all need to work together, basically.
Absolutely. And yeah, there's nothing wrong with being bullish on your project. I think you guys are doing some excellent work when it comes to LSDFI at TENET. And yeah, you mentioned some other, some key players, like Layer Zero. You did mention Anchor, and I think they're one of the biggest players when it comes to LSDs on the BNB chain. And I know they're currently looking to unlock some other LSDs on other like blockchains as well. So I'm glad you did mention them here today. Obviously, nothing we've said here is financial advice. We're just making some something to go do, like Woody said, go do some research on, and come to your own conclusions. So thank you for that, Gareth. So in closing, we would like to give each speaker an opportunity to give us an overview of your project's future roadmap and any upcoming updates that you have coming up for your project or your company. So we'll pass that over to Victor to start us
off. Yeah, I think this is everything. Thank you so much. I don't have too much else to comment.
Yeah, absolutely. And yeah, thank you so much for joining us. Very excited. Excited to see what Manta Network does moving forward. Thank you for joining us today. I'll pass that over. Next question to Balal.
Yeah, so thank you so much for hosting it. It's actually really fun to talk to everyone, and hopefully we can work together in the future as well. So ZKX, we have some exciting stuff happening for the rest of the year. We've been relatively quiet for about a year working away. And now we're about probably a few weeks away from our alpha mainnet launch. So we essentially are going to have a lot of the functionality of other CEXs in the future. So we'll have a spot product, we'll have derivatives, we'll have a simple convert tool, and we'll have maybe some kind of like a earn kind of product. But the thing that will wrap it up and make us quite unique in the marketplace is that we're going to have something called unified accounts, which actually makes it quite better for people to manage their risk and have more capital efficiency. So basically, when you do leverage trading, you're essentially exposing yourself to quite a lot of risk that if your margin gets called, then you can get liquidated quite easily. But with unified accounts, if you have multiple positions open and some are at profit and some are at loss, they tend to balance out a lot better, so that the risk of you getting liquidated on such a system is a lot lower. So I think for the average person who's trading crypto, the average person should only be doing spot trading. So we'll have spot trading by default. And then the people who are a bit more experienced who want to do leverage trading, I think doing leverage trading through a unified account is a lot better for their risk. They can manage it a lot better. So I think a lot of these products are only really available on CEXs. And so DEXs like us are kind of innovating this area and offering the same products as we are. So our plan is next few weeks, we do an alpha mainnet launch and a spot only. But coming in September is our big launch. So this is where we have spot, derivatives, and unified account, and a simple convert tool as well. So September for us is a really, really important month. and very exciting. And we're very curious on what will happen. We know the crypto market right now is in this kind of flux, kind of weird situation where some people are very bullish about what's going to happen by the end of the year. Some people are a bit more pessimistic. But definitely, I think the people who are insiders in crypto, particularly people listening here, I think the future is looking quite bright over the next few years. So we're very excited about how things are going. So yeah, that's our plan for this year, and a lot more to come next year. But the next 6 months will be quite exciting for us all, I think. Thanks.
Thank you. Yeah. So audience, be sure to check out ZKX, zks.com. And basically, yeah, like, Balal said, they have some very exciting new, features coming up, the convert tool, like he said, obviously spots, and very interestingly, the unified accounts. I don't think I've ever heard about that before, but definitely something to dive deeper into. So I highly encourage our audience to, check that out. And yeah, thank you for sharing that with us today. I'll pass the same question to Woody. What exciting updates do you guys have coming up?
Well, thank you for host today. And Next Protocol will soon have a very big trading campaign in next month. So follow us on Twitter and check our latest news. Okay, that's all. Thank you.
Thank you. Yeah, be sure to follow the Nest Protocols on Twitter accounts. You can just click on Woody's profile and just follow Woody and follow all the guest speakers here today, and also follow their individual projects to get updates on what they are currently working on moving forward in Q3 and also in Q4 of this year. And last but not least, I'll pass the same question over to Gareth.
Yeah, absolutely. So at the moment, TENET is live in beta mainnet, but over the next couple of months, we'll be really ramping things up as we move to the mainnet. We'll have first our bridge that we're building in partnership with Layer 0 will be going live so that people will be able to start bridging LSDs over to the TENET network, ready for restaking. Then the next stage after that, we'll be starting our lock drop campaign, where we will take the LSDs that have been bridged over, and we'll start to get commitments on restaking those to the TENET validators in exchange for boosted yield on the LSDs. And after that, we'll know what governance weight to assign to each LSD. So we'll then be able to launch the restaking. And with that, we'll be launching our LSD-backed stablecoin, LSDC, as well. And then later in the year, we'll be moving on to look at solving the Meta LSD problem as well.
Yeah, thanks for sharing that. Exciting development there. Looking forward to like you said, you guys will be working with Layer 0, which is a fast-growing I guess protocol when it comes to ZK and also LSDs, and excited to see what you guys do with them. And you mentioned that you guys are working on a stable coin as well. You said it's LSUSD, is that what it's called?
LSDC, liquid staking dollar coin. So it will be an over collateralized stable coin that's backed entirely by LSDs.
Got it. LSDC. Very, very interesting. Yeah, I'll be sure to check that out, and I highly encourage our audience to also check that out as well. Yeah, it seems TENET, you guys are very, very, for the lack of a better word, very bullish on LSDs. So yeah, excited to see what you guys come up with in the next quarter or in Q4 of this year. So thank you for sharing that with us. And yeah, all right, that's all the time we have today. Thank you all for joining us for this insightful discussion on liquidity, staking, derivatives, and its intersection with DeFi. We hope you found this AMA very informative and valuable. Special thanks to our panel of experts today for sharing their expertise and their perspectives on this new and evolving I guess category in the blockchain ecosystem. We also want to express our gratitude to our audience for being here with us. I actually checked our numbers, and I think we still have a few, like close to 1,000 people, still tuned in right now, and we've pretty much been going for like over an hour 30 minutes. So really appreciate your time that you spent with us today, and don't forget to check out our learn to earn NFTs. And be sure to claim your stamped NFTs. If you've been here for 30 minutes or more, you are pretty much eligible to participate in our learn to earn program. And for this first AMA, for this first launch, there's an unlimited amount of stamped NFTs that you can get. So if everybody here wants to participate, you can do so. So thank you for spending time with us today. And remember, the conversation does not end here. We encourage everyone to continue exploring the world of LSDFI. And my opinion is going to play a significant role in the upcoming bull market. Obviously, again, not financial advice, just do your own research and continue learning. So, stay connected and keep pushing the boundaries of possibilities, in the crypto world. And remember, be smart and trade at BitMarts. Thank you all, and have a fantastic day.
Thanks a lot.
Thank you. Bye, everybody.